Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's Dhanteras today, of course, a time when investors actually flock to buy the yellow metal as it's considered auspicious. So we will be getting you a special segment on how, you can maximize your gold investments. What are the smart ways to, kind of add sparkle to your portfolio. So we will be discussing all that in just a bit. But shifting focus to the markets, of course, the cues coming out of global markets are fairly negative. Looks like we are in for a downbeat start when it comes to the Indian markets. We'll be talking about all the stocks that are in focus in today's session as well. And if you have any gold investment related queries, send them in to us. We'll try and take them up with our special guest on the show, and we'll of course also be taking up all your stock related queries with our technical expert on the show. So all your queries, send them in to us on our live feed on YouTube, and we'll try and take them up. But before we go any further, let's take a look at the top headlines at this hour. The S&P 500 and Nasdaq snapped their longest winning streak in 2 years as Fed chairperson Jerome Powell says that the Fed may not have done enough in the battle against inflation, signaling that there may be more rate hikes to come going forward. Bond yields surged to around 4.6%. Asian markets come under pressure post the Fed chair's hawkish commentary. The GIFT Nifty, in fact, is also hinting at a start below that 19,400 for us. Crude regains some ground after this week's sell-off. In fact, Brent recovers about 0.5% to trade above that $80 a barrel mark. Among key earnings to track today, Eicher Motors, M&M, Coal India, Hindalco and ONGC from the Nifty 50 will be reporting their second quarter numbers. From the broader market, also track numbers from LIC, HAL, Tata Chemicals and Glenmark Pharma. Well, as I was mentioning, it is the season to buy gold and gold jewelry. In fact, it's Dhanteras, as I mentioned, a day when investors actually flock to buy gold and, gold jewelry as such. In this special segment, we will be focusing in on how you can maximize your investments in gold. For that, let me bring on board, our guest for today, Ghazal Jain, who's a fund manager, alternative investments at Quant Mutual Fund. Good morning, Ghazal. Great to have you on the show. Before we talk about the various investment avenues, when it comes to the yellow metal, let me ask you, where do you expect gold prices to move in the new year, given the fact that, over the last year, we've seen prices remain fairly volatile. Investors have turned risk off in the wake of, the tensions in the Middle East, which is also, kind of worked well for this yellow metal. Going forward, do you expect another volatile year for gold, and what are the levels you'll be watching out for when it comes to gold?
Thanks, Nandita, for having me. A very good morning to you as well. So, yes, I think in the very near term, the situation in the Middle East will definitely, be influencing gold prices. In fact, even though prices have run up quite a bit, since the this conflict broke out in early October, I think further short-term gains in gold from this level are possible. If this situation actually intensifies or worsens and, escalates to include more countries. But on the flip side, if this situation improves and, we see the risk sentiment or the, investor appetite for risk taking improve, we can see some of this geopolitical risk premium actually coming off, which we have seen in the last week or so with gold. So I think that in the very near term would be one influence on gold. Apart from that, if we take a little bit of a medium-term view, once this geopolitical risk premium kind of, moves out, we can see fundamentals of higher interest rates and, the dollar strength in the US, that would actually, come to the front. And when that happens, a reversal in prices is likely because, higher interest rates and the dollar both are really like nemesis for gold and weigh on gold prices, and that actually can be a good opportunity for investors to buy gold. And if I'm looking at it a little bit long term, of course, 1 or 2 rate hikes from the Fed are possible in the near term, especially because US economy is still looking resilient and inflation there is still above the Fed's target. And so we can expect, some near-term hawkishness from the Fed, and that will definitely be a headwind not only for gold but even for markets. But a slightly longer term view, and it's likely that the Fed's tightening is coming to an end, and we're going to see some pullback in economic activity in the US starting 2024 with all of the aggressive tightening that has played out. So the markets are expecting a first rate cut somewhere in mid 2024, but there is also a sense that, the Fed's hawkishness could get tested sooner. If we see some real growth setback in the US or some other sort of, financial shock that could come in. So, I think overall, the medium-term outlook for gold is looking constructive. Prospects have improved from year on, and we are definitely positive on gold. And I think apart from the returns, it's very important that, given the kind of systemic risks that are there on the horizon, the geopolitical risks, the vulnerability of risk assets, to all of these moving parts, whether it be interest rates or the or growth or the geopolitics, all of this kind of really, makes a strong case for holding gold as a portfolio diversifier in investors' portfolios.
Right. Of course, keeping some bit of exposure to gold is crucial, in times, when, of course, we have a war playing out and, tensions in the Middle East, and at times, of course, when investors turn risk off. But what is the kind of exposure one should have in their portfolio at the current juncture? Also, given the fact that you've said, that, you expect gold prices to dip, going forward once, dollar strength and, the fact that Fed could hike interest rates a couple of more times going forward. So would you say that this perhaps is not the right time to buy into gold and wait for that dip to come by before you look at buying afresh?
I think, it's difficult to time the market, but yes, some pullback is definitely expected, in the near term. And I think, so it would be advisable if investors can, not make very large lump sum purchases at this point, but, rather try and stagger their purchases over the next couple of months. I think that will be a more prudent way to build your allocation. And coming to what kind of exposure, I think, it's important that investors look at gold more from a strategic point of view and not tactically. I mean, just over the last 3 years, gold has, proved itself as an effective portfolio diversifier. And, the risks that have come have actually, taken investors by surprise, be it the pandemic, the Russia-Ukraine war, or now the conflict in the Middle East. So, a strategic allocation of about 10 to 15% is something that investors should look at, when it comes to gold. Especially, if I may add, like the domestic economy is definitely looking well placed. But we have to keep in mind that it is vulnerable to external shocks, whatever is happening on the global front. And as such, a meaningful allocation to gold becomes even more important.
Right, that's the view. Then, of course, strategic 10 to 15% kind of exposure, to gold is something that is, kind of desirable. But, of course, we know that physical gold is not the only way to, go about investing in this yellow metal. There are other avenues like, ETFs, you have gold bonds and what have you. But which is the best vehicle that one can look at the current juncture?
Sure. So, of course, Indians, have historically, traditionally, culturally been investing in gold. And I think about 15% of Indian household assets are in gold, as of latest data. And that is very, that's a very good start, actually. But I think, somewhere we Indians have got it wrong when it comes to, making the difference between consumption and investment. The lines get blurred when it comes to gold because, of course, physical gold, jewelry specifically, is an investment because the underlying is gold and hence, you do see an appreciation in prices over the years. But the question really is physical gold or jewelry, a good investment? Is it, the best way to maximize or optimize your returns? And unfortunately, physical gold is the most preferred investment route here. But, I'd like to highlight that physical gold investment comes with its concerns of purity. Also price inefficiencies because of, the high retailer markups, the making charges, storage costs that are involved, as well as the lower resale values. All of this eat into investor returns, right? So then, we have this, other space that is growing fast thanks to, our digital economy and increasing awareness about financial products. And today, gold ETFs, gold mutual funds, and sovereign gold bonds are the leading financial gold investment avenues. And really, both of them are very good options for long-term gold investment. Gold ETF units are backed by, gold of the highest purity. They trade on the exchange just like shares. giving investors not only the potential of gold investment, but also the flexibility and the convenience of equity investments, and takes away all the hassles of holding bulky physical gold. And of course, extremely price efficient. You can buy and sell ETF units close to market prices during market hours. So all of this, really has led to this increasing acceptance for gold ETFs. Just in October, we've seen about 840 crores of inflows come into this category. So I think it's time that investors, you understand that gold is an important investment, but it's also important, to make the difference as to which avenue you're choosing to invest in this metal.
Right. Anything that investors should keep in mind, any particular points before making a lump sum investment in this yellow metal at the current juncture?
Sure. So long term, definitely prospects are looking good. If you have to make a lump sum purchase, especially because it's such an auspicious time, you can go ahead with it because, of course, considering the outlook, we're definitely, moving into the next phase of global monetary policy in 2024 and 2025. And that should actually, be positive for the metal. It should take off the pressure, of the metal that has been there over the last 1.5 years. And yes, definitely invest in the metal. But again, instead of lump sum purchases, I would recommend a staggered approach. And lastly, I would say, returns are definitely good, but your approach to gold in your portfolio should actually be in the form of, a diversifier. And if it can actually cushion the volatility that the risk assets or equity component of your portfolio is going through, I think that's good enough reason to actually be holding gold.
All right, that's the view. Of course, a portfolio diversifier rather, gold is known for that. And of course, it's an auspicious occasion and investors do flock to this yellow metal. As we all know, the Indians' love for gold. With that, Ghazal, thanks a lot for taking our time and sharing your insights as to how one can actually maximize their investments in this yellow metal. Wishing you a very happy Dhanteras and a very sparkling Samvat ahead.
Thank you, Nandita. Wish you the same.
Thank you. With that, let me also bring on board our technical expert for today. Joining me is Raja Venkatraman of Neotrader. Great to have you on the show, Raja, on this occasion of Dhanteras. Wish you a very happy Dhanteras. But looks like the mood in the market is not very festive, given the fact that we are poised for a lower open. Global cues looking downbeat after Fed's commentary on interest rate hike trajectory. But what are the kind of support levels you'll be watching out for going into motor trading on Sunday?
Yeah, good morning, Nandita. Thank you for the invitation and happy Dhanteras to you and your entire team. Now, when you're looking at the markets, this was something which all of us were expecting because over the last few days, Fed has not been giving some positive vibes. So what has really happened is that post the Fed event, the fallout which was seen in the GIFT Nifty seems to be done for the moment. And what I'm looking at is that there are going to be headwinds around 19,500 and that will continue to remain an important point to consider as we move ahead. So now if we were able to close positively above 19,500, then we can see a upward trajectory towards 19,800. That's what I'm expecting within the next week. Now, overall sentiment continues to remain bullish. So when such dips are emerging, one should consider this as a buying opportunity because overall the result season has been mixed and favorable tailwinds are emerging even from the macros as well. So overall, there seems to be a positive drift of sentiment here. And based on the time cycle studies which I'm doing, I feel that the market will tend to remain positive and we can expect a very favorable closing on the positive side by the end of this month. So I am looking towards the positive side only. I'm not looking at these breakdowns as a selling opportunity. I am looking in fact at quality stocks on dips like this as a buying opportunity.
All right, dips offer a buying opportunity at the current juncture. But let's talk about the stock of the day. And before we move on to some queries, Tata Motors, we've discussed this stock on numerous occasions, Raja, but some positive coming in. Moody's has upgraded the rating for both Tata Motors and JLR, and it expects gross debt to fall by 30% vis-a-vis 2022 levels by March 2024. Numbers were also fairly strong for Tata Motors, and the stock has decisively been holding above that 600 mark for quite some time now. Any change in targets, any upward revision in targets when it comes to Tata Motors, perhaps 700 sometime soon?
Yeah. So last time I had mentioned Tata Motors, the results were due on that day, and the Tata Motors did do well, and it continues to hold on to those levels. So yes, there could be an upward revision. We could target towards 730, but it will take at least next 3 to 4 weeks for reaching the target. But overall momentum seems to be very good. It seems to be a good play for the current series as well as the next one. And like you rightly said, the re-rating of JLR and the entire Tata Motors group does augur well. The stock has spent sufficient time in consolidation, almost you can say 2 to 2.5 months in consolidation. And such kind of strong news flow will definitely favor the stock to the upside.
All right, that's the view on Tata Motors then. But let's talk about the top brokerage call of the day today before we move on to queries. In fact, Page Industries, that's the stock we are discussing when it comes to the brokerage view. Numbers came out yesterday, weren't really exciting. And of course, we've seen the stock also, give negative returns on a YTD basis, even on a 1 month basis. This morning we have, global brokerages coming out with positive view. Morgan Stanley has an overweight rating, target price at 44,738. It believes that the management, is convinced that, this phase is transitory because, of course, margins margins have been okay, but top line has not been all that great. But management, of course, confident of a turnaround sometime soon. And Macquarie has a underperformed call, target price at 31,000. So, divergent views coming in from brokerages. What are your own thoughts? Do you think the stock will remain in a downtrend, or do you expect it to snap out of it anytime soon?
Yeah, the stock is not able to take care of the cycles which it's going through. And the stock is under continuous pressure for more than a year. And this trend will continue, and the lower levels of around 32,000 is where the potential target is emerging. But then that's a long-term target. The overall trends remain bearish. So one should not be looking to either invest or trade in this counter, because at every rally, there is going to be a selling opportunity. So there is no point in investing or trading here. It's a little volatile stock, so it will be an avoid from my side.
All right, and avoid from Raja's side. We had a query on this stock from Mayank Vyas. Hope that answers your query. But let's take up all the queries that are trickling in this morning. Trilok has written in, wants to know your thoughts on Mazgaon Dock for the short term and the long term. Of course, we know that the shipbuilding stocks have done pretty well on a 6-month basis, but off late they have witnessed selling pressure. So for a long term investor, how should one look at it now?
Yeah, so this the plot in the defense space and defense associated stocks did do well a few months ago, but now what's happening is that they are not being able to conjure enough momentum. The only stock that seemed to have done well after a drubbing was HAL, which saw almost a 300 plus point recovery from lower levels. Otherwise, most of the stocks are currently struggling. So if you are holding Mazgaon Dock at the moment, you can continue to hold on with a stop below 1900. Otherwise, if you are choosing to invest into the stock, this is not the right moment.
All right, hope that answers your query, Trilok. But next query, of course, coming in from Debu K, wants to know your thoughts on Raymond. Would you expect this stock to reclaim 2000 anytime soon, Raja?
Yeah, even this stock had its fair share of run few months ago, but what's happening right now is that the stock has witnessed a sudden capitulation, and every rally will continue to witness supply. So at the current juncture, the overall trends doesn't seem to be quite favorable, and looking at the kind of conditions this textile sector is into, we need to watch and tread carefully. So it's better to avoid this stock right now. But if you are holding the position, you have got a target zone towards 1950 where you should definitely consider booking some profits.
All right, that's the view on Raymond. Hope that answers your query. Let's take up the next query. This one is coming in from AD Kumar. Wants to know your thoughts on Apollo Hospital. Of course, yesterday it was the top Nifty gainer. Numbers had come out, reacted positively to it. But would you advise investors to, ride the rally, or perhaps, look at other stocks in the healthcare space?
Oh, yes, definitely. Apollo Hospital has been struggling for a while, and then the prices have already started reacting ahead of the numbers. And with a positive numbers coming through, one should wait for some reaction to emerge rather than directly exiting the stock. Because if it is able to survive above 5,300 levels, then the next target is emerging closer towards 6,000. So, which is a very positive sign for the stock. So, those who are holding can enjoy the ride to the upside.
All right, that's the view on Apollo Hospital. Hope that answers your query. Next one is from Vignesh. Wants to know if it's the right time to average Happiest Minds at current levels. In fact, he says that he has 150 shares at a price of 1,045 rupees. He doesn't want to sell on losses, but he wants to average it. Would you advise him to go ahead and do that?
Yeah, we have been discussing these stocks in our earlier sessions, and I have found that this stock is never able to conjure up enough momentum despite any kind of market cycle. So, when the stock is having such a kind of price action, it's better that we look at some other opportunity and ignore averaging it. Look for higher levels to exit, because below 830, 800, it can sink further.
All right, below 800 it can sink further. That's the view. Hope that answers your query. But last query for today, it's coming in from Vijay. Wants to know your thoughts on a Dish TV. Stock hasn't done all that poorly over the last 5 sessions, up 4% or thereabouts. For somebody who's holding on to the stock, would you advise them to, sell on rally, or would you ask them to hold on for the long term and perhaps, sit tight?
Yeah, the stock, yes, it had attempted to give a fresh upward drive. Now the stock is consolidating at the moment, and with the parent company also doing well right now, one should look to hold on to this stock and look for favorable tailwinds to emerge. So my advice is to hold on. Your stop loss will be below 1,515.
All right, keep a stop loss, below 15 rupees on the stock. I think one more query I would like to squeeze in here. Manish Kumar wants to know your thoughts on escorts. Of course, we know that, when it comes to the auto space, we have seen divergent kind of trends emerging when it comes to the auto segment as well as tractor segment, right? So particularly for escorts, of course, stock is under pressure, just about managing to hold on to the 3,000 rupee mark. How would you advise investors to play this particular stock from the auto space?
Yeah, so when you're looking at escorts, they have not been able to, generate enough momentum. And yes, the auto sector, like you rightly said, have tend to be mixed. Yesterday, we saw after some strong drubbing, we saw M&M revive from lower levels. But the entire trend now, in unlike a few months ago, where the entire auto sector was going up, dragging all majority of the auto stocks along. Right now what's happening is that this stock is unable to survive the pressure, and the hints are towards the downside. So if you're holding escorts, you have to be very careful, because below 3,000 the trend will slip very fast.
All right, of course, that's the view on escorts. Hope that answers your query. This bring us to the end of this query segment. But before I let you go, Raja, what are the recommendations that you have for our viewers this morning?
Yeah, I have 2 recommendations, and the first one is a buy on IndusInd Bank, buying at current levels above 1,509, and having a stop loss of 1,490 for an upward drive towards 1,535, 1,545. You can choose to buy McDowell around 1,100 with a stop loss at 1,080 for an upward drive towards 1,130, 1,145.
All right, those were the recommendations coming in from Raja. With that, Raja, thanks a lot as usual for joining in this Friday morning and sharing your thoughts with us, and of course answering all of your queries. Wish you a very, very happy Diwali going forward.
Same to you.
Well, with that, we've come to the end of this edition of Morning Trade. But before I go, a reminder for our viewers, 10 a.m. is when ESAF, Small Finance Bank, lists. And, it saw a good, response in the IPO, 73 times oversubscribed. And, of course, issue price fixed at 60 rupees per share. You can expect, according to analysts, you can expect a listing pop of somewhere around 35%. So we'll be watching out for that at 10 a.m. But with that, it's a wrap on this edition. Thanks a lot from me and the entire team. Wishing you a very happy Dhanteras and a very sparkling new Samvat going forward. Happy Diwali. Stay tuned to Money Control because coming up next is Opening Bell.
So every morning I wake up, I start, the first platform I see in the morning is Money Control.
The last app that I see before I go off to bed is Money Control.
For years, Money Control is the site to be.
All your finance and investment needs.
Want a complete scan
To GIFT Nifty and seeing what's happening in the global market.
For all updates, news and views.
and what lies ahead for the next year.
Money Control, you're doing an amazing job.
Stay tuned for the most exciting news to Money Control.
I'm going to be there at the Money Control's Diwali party.
Are you going to be a part of it?
What an amazing Diwali party at Money Control.
I hope to see you all there.
Don't miss the fireworks.
Happy Diwali!